Good day, traders, and welcome to the premium video newsletter for Monday, June 10th, 2013. The first thing I want to get into today is the overnight trading action. The Nikkei was bullish and closed up over 400 points, which is fairly impressive considering how bearish the market has been during the past few months. The U.S. stock market was neutral overnight and for the most part of the trading session. Friday's late afternoon rally took a lot out of the market, and a breather was mostly expected by most traders today. The stock market didn't do much during the trading session and was mixed along with all the other indexes most of the trading session today. There's no real interesting fundamental news till the middle of the week, so the stock market is going to be technically driven during the next few sessions. This typically results in choppy range-bound trading action, and that's what we should be expecting for the next few trading sessions. Looking at the intraday view of the S&P 500, it looks like the stock market is resting at a very critical level right now. If the market drops, once again, below the resistance level, which is right now below the 1640 level, many day traders, including myself, are going to jump on the bandwagon and sell this market till it hits the support near the 1600 area. Looking at the daily view of the S&P 500 contract, it looks like we're just hitting the resistance level once again as the market consolidates further and further. This creates ideal conditions for short-term intraday scalping, but it's terrible conditions for directional trading opportunities because the stocks lack any directional bias due to the stock market moving back and forth continuously. The 10-year bond futures contract hit the support level and backed off once again. If we go much lower than we are at right now, the market will begin trading at another lower level. If this is the case, cash bond prices will be moving higher. This will cause substantial volatility to the U.S. stock market, so keep your eye out for this to happen, especially towards the end of the week when most reports are going to be coming out from the Feds. Looking at our existing positions, MGA is not really doing anything at this time. The volume was very low, which is not unexpected for a Monday without any news. Also keep in mind many people are taking summer vacations right now, so liquidity will be slow till the end of the week. I don't anticipate much trading action for the next few days unless something very unexpected happens. Similarly, PFE Pfizer is also doing very well. Although I believe the only thing that's holding this position up right now is sector-related news. Several large funds are still holding this position, and it's one of the weakest ones in the sector. A little selling pressure and the stock will hit our target at 27 to the downside. Some new setups for tomorrow morning for you. There's a 4x4 entry on Intel Semiconductor stock. Enter the position long if it trades above 25.20 on a buy stop. If the position is not filled by lunchtime New York time tomorrow, cancel the order. If filled, place a sell stop below today's low at the 24.50 price level. The semiconductor sector, which is what Intel is part of, is gaining strength and is a bit stronger than the general stock market. I'm being careful with long entries right now due to the conditions of the stock market. Always do sector strength analysis when markets are topping to ensure continued momentum in your direction. Be very careful with Intel because the market is topping. So don't expect this position to move 15-20 points in our direction. We're looking for minimal profits right now in a range of 3 to 4 points. The next setup is an inside day short on a stock in the computer software industry. The ticker symbol is VMW and the name of the company is VMware. I recommend selling the stock at 69.70. And if filled, place a buy stop. That's a buy stop because we're going short to protect our position at 71.65. That's it for today's tutorial. I'm sure as this week develops, we will have a better idea where the stock market is going to be moving in the longer term. We mostly stayed out of trouble during last week, while many traders got whipsawed back and forth while the market was going up and down. I'm still leaning to the downside with a range-bound choppy bias, the way it's been unfolding till now. We will see later if this week continues the way it's been going so forth. Good night, everyone, and I will update you tonight or early tomorrow morning as things develop. Have a great evening, everyone.